Hello, this is Paul Langham again with part two of the Veterans Day trading on the Euro US dollar. Just a quick update here for you. As you can see, again, this is the usefulness of predictability or otherwise. There we took out 50% of our trade. We actually went long here, and I was looking for this upside, and it shows you what happens when you get married to a trade, which is why you need to trade your plan, stick to your plan. We took 50% out here, and I was looking for more upside, but I did say I would come out here and go short, and that's what we've done there. And we're actually just short from down there, and you can see the result of this trade at 63. Sorry, 06, not 63, 06, and we're now at 55. That should be 0.3. So we're looking at nearly 50 pip trade here, and that's what you can do when you don't stick to one position. You can always go with the balance of probabilities, and the balance of probabilities from this morning were, with this momentum move, balance of probabilities were to the upside, and they were still to the upside. If you get 5 of these happening, 3.5 will go upside, but 1.5 will go downside, so you need to be prepared for both sides. That's what we did. This is live trading, and you can see where we are. Right now, and it's looking quite good at the moment still. So I've got 100% of my trade now short from here. Just put that back in again. So 06, yeah, and we were at now at 71. It's moving around quite nicely. I'm going to hold that position. That will probably almost certainly test again to the downside, and we'll see how it goes. See if it breaks. I'll keep you updated. Hello, it's Paul Langham here again. Update on this trade. You can see we're trading live here. This is a very important situation. This is a very important level now. If this one gets broken, I'm going to close this trade. So on this red line, so 149.82 I think it is, but I'm expecting some more downside here, at least to try and get to this level. It looks like there was some quite heavy buying that came in here, pushed it back up again. If you remember, just to recap, we're in there. This was just a minor pullback. There's absolutely no consequence whatsoever. This is slightly more important. This one here needs to push again and break, but I'll be keeping you updated with the trade. Paul Langham here again with a quick update. As you can see, price is pushing to the downside, so it's decisive here whether it gets down as far as here. If you don't think it's going to make it, you could in fact just close out something here, or alternatively wait for some sideways action in the hope that it will drop later. So just to repeat, that the level that I will come out at actually is here, but obviously looking forward for it at least attempting the low there. If you want to take something out here, you could, for example, close out 50% of your position here. Here we go again. You can see that we're pushing to the downside. I'm probably going to take off actually 50% of my trade round about here anyway, because it's coming to the end of the European session, actually way past the European session end now, and the New York session, as we said previously, even though notwithstanding the fact we have had this quite nice momentum to the downside, I believe that the market is slightly thin, probably fewer participants involved than normal, and I think we might get some sideways from here, and I'm thinking I'm just about ready to take off 50%. In fact, I'm going to take it at where we are, 65 now. It's a nice figure, so I'm going to take off 50% at 65, and I'll keep you updated with the rest. Okay, Paul Langham here again. Okay, so as we see, typical type of price action goes for the double bottom. Perhaps I should have waited to come out there, because I could have actually obviously closed a little bit lower at 60 there, for example, on the double bottom. It's very difficult to know whether a price will actually push and reach the double bottom or come short and then bounce to the upside. What very often happens is this type of thing: comes short, so this one's down, comes short and then bounces to the upside. I'm still holding 50%, so I'm going to hold 50%. As I said, this is now going into the to the PM session in New York. We'll see what happens. No predictability. I'm obviously got the stop is in here, coming out there. Maybe you'll get another lower high actually comes in somewhere like this, perhaps in a minute, maybe forming, but we'll see. No predictability, still in the trade, 50%. Quite happy to have taken the other one out. Hello, it's Paul Langham here again. Okay, just giving an update. I'm going to make this the final one on this trade. As we said, we were looking for price to do this type of thing. Second push. The second push came. We've effectively made a double bottom. It's going into a trading range now. End of the day's trading anyway, and it's liable to do this type of thing all night now actually. So I'm going to just come out where we are now, which is 149.70. So 70 on that one. 149.70. Sorry, 149.70. Yeah. And I'm going to call it a day at that. So the 50% we took out around about here, and we're going to take the other 50% actually at almost at the same spot. Okay, I hope everybody enjoyed the live trading we did today, and look forward to doing another session shortly with you. If you need more information, come over to the site at www.exacttrading.com or drop me an email at paul@exacttrading.com. Just finally to say that based on the argument that we made here, that when you get this type of momentum, the percentage odds actually say when it does this that it will go to the upside. Obviously today with odds, I think we're saying between 3.5 in 5 times it will go upsides. Obviously today that was one of the 1.5 which didn't go. Doesn't make an option because we just doesn't make a difference to us because we just take the trade whichever way it goes. But as this momentum break to the downside is also quite significant in terms of its speed and velocity. You can see that actually a little bit of a gap there even. Again, the probabilities suggest that tomorrow, when everything is back to normal, we've got full trading in all countries overnight. Tomorrow we could well see the downwards continuation. So again, it's just a probability game. This type of move, this is a momentum breakout. Price will follow the momentum, and it needs some time here just to get accepted. The new prices need to be accepted by the market before they can continue on. Doesn't mean to say it's going to happen. Probabilities say that it will, as it did here. Probabilities said they will go upside here. Balance of probabilities said upside. In fact, if we say it's a 70-30 bet, this is one of the 30% cases which went to the downside. And again, we've got the type of 70-30 bet here, and 70% downside, 30% upside. Doesn't matter which way it goes, you just take the trade either way. The point being, I think, as you can see, that if we take the predictability, this incessant desire that we have as human beings to want to predict everything and say exactly what's going to happen and what price it's going to, what the target price is, and so on and so forth, which is what you see absolutely littered everywhere in the newspapers, in the media, or on the internet. If you take that away and just say, well, actually I'm just going to go with the market wherever the market goes, things become so much easier, and that's what we do. We're just looking at probabilities, waiting for the market to break. So if it breaks downwards, which probabilities say that it we'll be with it. If it breaks this one up here, this level here, and it starts going back up here, then we'll also be with it. It's one or the other. In between time, in here, in this range here, I won't touch anything. So it's a break here or a break here is the next move on this one. Hope you enjoyed it. Thanks very much.